top of the top. Hopefully, you're doing well, and this video finds you in a good place. Robert Lewis, NMLS license number 180100. Want to talk today about a couple of things in this show, if you will. The agenda is as follows. We're going to be talking about manufactured homes and how it can help with the affordability piece. We're going to go deeper with that, give some pros and cons to financing a manufactured home. We're going to then talk about rates from a 10,000 foot view nationwide as it pertains to today. We're going to get into the down payment program section, if you will, for Texas, and then the nationwide programs. Before we get into it, if you have any questions, please put a Q followed by a colon with your question. If you have a comment, same format, C colon comment. Or if you want to make a statement, say it with your chest. Okay. We're in them times, right? Say it with your chest. We don't have to agree, but what we must do is be respectful of one another. So as long as it's respectful, do what you like, right? If it's not, we will address it accordingly. Without further ado, let's get into today's show. Affordable housing, topic that's been ran in the ground over the last year and a half or so, going on 2 years now because of the interest rates. You guys will start seeing here pretty quick all of the naysayers and the doomsdayers that were telling you not to buy and this, that, and the third. Now that rates are coming down and we start getting these Fed fund rate cuts that will eventually lead to lower interest rates for mortgages, those same folks are going to flip on you. Now they're going to be telling you to buy because the business plan is get your attention, get you on a list, and then tell you what is really going on. We do it a little different over here. We want to tell you what time it is because we respect you as an adult, right? So all that said, affordable benefits of manufactured housing. Whenever housing starts increasing in price, folks start looking for affordable options because most people want shelter. And at the end of the day, that's what housing provides, right? Shelter. That's the Maslow's hierarchy of needs. You know, that's at the tippity top, right? You want to be safe and secure, especially if you have a family. So that's what manufactured homes is allowing or fulfilling a need in the marketplace because the prices are not as expensive. Now, depending on where you are in these United States, that necessarily isn't the case. I've seen some manufactured homes as high as $700,000. But for the most part, in the middle of the country, you are going to be safe if you're looking to manufactured homes. So let's get into it. How can you finance a manufactured home? I'm glad you asked. You technically can use all four types of loans that are available that most of us use, right? FHA, VA, USDA, and conventional. Your lender, whoever you know, like, and trust that you're going to deal with, will be able to get you into the weeds, the particulars based upon your scenario as to what loan type would be the best for you if you're going to pursue manufactured homes based upon that home. And that's the key. With all of these loan types, there are going to be different intricacies, different guidelines, such as size of the home, such as age of the home, that you might have to make sure that that box checks before you can move forward. I'll tell you one that a lot of folks don't know. We'll just throw it out there to you because you guys are loyal listeners. But if you are looking to purchase a manufactured home and it's not brand new, okay, if it's brand new and you're buying it from a dealer, Palm Harbor, or whoever the dealer is, and the land at the same time, that's more of a construction loan. There's different ways of doing that, but I'm saying a pre-existing manufactured home. If that home left the dealer and went to 123 Main Street, and then some point in time in history, it went from 123 Main Street to 678 Jones Street, then FHA, USDA, and conventional it's a no go. You're not going to be able to move forward with that loan type. VA, back to the VA, right? Those that know that's the best loan on the planet. Shout out to those of you that made that commitment. Make sure you don't let anybody talk you out of using your benefit. I digress. But VA is the only loan type guidelines that doesn't really have an issue if the subsequent move, the property is affixed to the land properly, then shouldn't be an issue. Okay. But for the most part, FHA, VA, USDA, and conventional, again, get with the lender that you know, like, and trust to make sure that the property that you're looking at will meet guidelines. Let's move forward. Let's get a little deeper. Specifically, FHA loan tips for manufactured homes, right? I'm going to say 620 minimum, although technically FHA, you can have 500. If you got 10% down, 500, 579. We know that. 580, if you get an approved eligible, that's a big if nowadays. You can put as little as 3.5% down. But we're talking manufactured homes here. Little different, okay? So I'm going to say 620 worst case scenario. The higher, the better, okay? Also, when it comes to your debt to income ratio, right, we want to be more conservative. So 43 or lower. That's when you take the proposed house payment, PITI, principal, interest, taxes, and insurance, and other potential fees that are associated, plus all the minimum monthly liabilities that you have, add them together, divide that into the gross income, qualified income on the application, 43% or less, you should be good to go. Again, down payment assistance, 3.5%. That's the one good thing with FHA opposed to, say, like conventional, where you might have to put a little bit more down. Let's move forward. VA, again, VA, best thing smoking. As long as you're active duty or qualified, either veteran, we'll just say honorably discharged, or a qualified spouse of a veteran that may have gone on and things of that nature. Again, your lender should know how to guide and direct you if you choose to go somewhere else. But that opens the door for you, right? As far as you being able to get this loan type, this type of property, right? As far as the loan limits are concerned, and I didn't mention that with FHA, but you're going to have loan limits based upon where the home is located, okay? VA a couple of years ago, they got rid of the a loan limit, okay? There's no loan limit if you've not used your certificate of eligibility. If it's in place, then you're going to default to the maximum conforming loan limit in your area. For the most part, I think that's 766,520 today. It's a lot of house, right? But again, that's something that your lender should be able to vet out for you. And then if you're not I'll say it this way, if you have less than a 10% disability with your VA, then you're going to be subject to a funding fee. And with manufactured homes, it's 1%. Okay. So just some 10,000 foot view. That's not an all-inclusive list for FHA or VA. Just giving you some things to think about when you reach out to a lender, right? USDA, for us regular folks that didn't join one of the services, if the home qualifies, if the home is in a USDA eligible area and you meet the income requirements, you can too look at a manufactured home doing USDA. That's best of both worlds, right? I didn't mention it, but with FHA, VA, and USDA, you also can use a qualified down payment assistance program. And in certain cases, your total loan to value can exceed 100% in this case, right? Can't exceed 105. But again, not going to get into the guidelines. Your lender should be able to guide you through those things. Let's see. Is there anything else with USDA? Yeah, loan limits are based upon where the home is located, and um, yeah, that's it. That's it. That's it with USDA that I want to address for right now. Moving forward, conventional. Again, higher the better. Higher the better, but 620 minimal is what you want to look at. Um, if you're, depending on what type of conventional loan program you're looking to use, you could put down as little as 3%, right? If you get qualified for one of the first time homebuyer type programs. Uh, yeah, great program. You want to deal with the conforming loan limit, $766,520. So that should cover a majority of the people. So as you can see, a solution to affordability is being able to buy at a lower purchase price, right? And manufactured homes is something that can give you an answer to that problem. That's a solution. So as we move forward, we want to look at some pros and some cons, some pros and some cons. Let's do it like this. And so, what are some of the pros? I would say that obviously it's more affordable than a site built home, a traditional home. Uh, it can be built faster, okay? Less time to build one of those types of homes and get it set up and get you in it. And there's a variety of different styles, types, and floor plans, okay? Some of the cons. The depreciation in value may be faster than site built homes. And that's something you really want to make sure you understand. I don't know why, but I really agree with that. Manufactured homes, even with folks that take care of them, they're very good stewards over the home. I don't know if the way it's constructed, but it depreciates faster, in my opinion, right? It may not be as durable. That's kind of same thing what we were saying about depreciation, but may not be as durable. Maybe because it's on the platform that it's on and the stress and things of that nature, and it may be subject to stricter zoning regulations. Right? I've actually seen that in a couple of cities to where, depending on where you are, the city may already have all they want within the city limits as far as manufactured homes and things of that nature. You might have to move out further. Okay. So just some things to keep in mind, right? So with that, you want to schedule a consultation sooner rather than later. Okay, sooner rather than later. And you want to do that with a lender that you know, like, and trust. And I had it on the screen here, but I guess I messed up. Let's see if we can't put it back on here. You dig? I don't know where it went. But anywho, you want to schedule a consultation. You can look right below. We don't have the QR code. We got some technical difficulties. We live. You feel me? But all you have to do is https colon / or is that / linktree, right? linktr.ee / lend to USA. And you won't go wrong. Also, avail yourself to the channel. This is where we put longer form information that's not TikToked or reeled, right? Because some of these things are long-winded. Okay, you want to get an understanding uh, as to what it is that you're doing, so you don't have buyer's remorse. So go to the YouTube channel, like, subscribe, hit the notification bell so you know when we upload something. And if you do watch something, man, comment. Let us know you're alive. Again, doesn't have to be. I agree. I'm not looking for one of those type of things. But if you do disagree or have other information, just do so respectfully. I think I've said that enough. All right, let's move. Let's move forward. Where we going next? Actually, I got ahead of myself. We went to pros and cons, right? Yeah, we went to pros and cons. Yeah, we did over that. Okay. So let's move forward. We want to talk about rates, interest rates from a 10,000 foot view. Here's the deal. Here's the deal. Not gonna, this is not specific to you or your situation. You obviously have to submit an application. Okay. Submit all your documentation. What's all the documentation? Your identification, your ID card, right? Valid, current. Your proof of income, most recent 30 days. Your asset statements, wherever you're going to get whatever funds that you're going to use for down payment and or closing costs, or to show that you have compensating factors, you need the most recent 2 months in the form of a PDF. PDFs are everywhere now, guys. If you haven't learned how to do the PDF, reach out to me. I'll send you a video or something of that nature where you can log onto your account and download a PDF, show you where to put it safely so you can upload it to the lender that you're going to use so that they can properly qualify you, right? So asset statements, income, identification, okay? What else? What else is the minimum? Obviously, they're going to pull your credit, so you got to give the authorization for that. But other than that, that should get the ball rolling to where you can really get qualified. You may have some other things based upon your specific situation, but when you do all of that, then you can actually get rates that are applicable to you and the corresponding APR. Interest rate APR. APR is just an indicator. It's a oh hoo hey, it's a hey. There's cost associated. Now, all costs that are associated with you buying a home do not go into the APR calculation. But and I'll do a video too on this. I keep saying it, but the lender, some of the lender fees, title fees, some of those things, prepaid interest go into that APR calculation. And what that number is to do is to tell you that, hey, their cost, and that's where you really shop, right? And so that said, as of today, as you can see, man, rates are going down. Now, as soon as that 30-year gets below 6%, 5.99%, trying to tell you, don't wait until then because there's still a shortage of homes. Don't let these folks tell you otherwise, okay? Don't let them tell you otherwise. And you don't want to fall back into a situation where there's home appreciation because there's a lack of inventory. I think they're going to try to play with the numbers to kind of control that flow. But there's a lot of folks on the sideline. I got a lot of people, a lot of folks that I've qualified over the last year and a half that they just waiting on a certain number. And as we saw about 10 months ago, once we got under that 6%, boom, applications picked up. It was popping. It's popping now. So just to give you an idea, 30-year, 15, jumbo. A lot of you guys are scared of arms. For my arm people, right? 30-year FHA, boom, 575. I'm trying to tell you, right? 575. And then the VA under 6%. It's up, right? So don't wait till the last minute if that's what you want to do. And then also, don't buy a house because rates are going down. Because ownership is more than just purchasing, going to the title company, getting the keys, and being on Facebook saying I bought. You have to be able to maintain, right? So make sure you're dealing with somebody that helps you understand not only the purchase, the maintenance, and the exit if at all possible. I'm just saying, let's move forward. Down payment assistance programs, always going to talk about the state of Texas first, right? Here's the deal. I did a video, I think last week on this, but when you're looking down payment assistance, DPA, whatever state you're in, you want to look citywide, city, county, parish, township, then state, then nation. I'm telling you, there's more DPA programs today than there ever have been. When I was championing this, back in 2009, nobody wanted to hear about a down payment assistance. They try to make folks feel crazy, right, for wanting to do a down payment assistance. Now it's commonplace. So there's really no excuse. Speaking of Texas, the two that I like the most, okay, and the reason I like them the most is because it covers the most of the state and the most people, okay? Heroes and regular folks, right? And so TDHCA and TSHAC, TSHC, TSHAC, Texas State Affordable Housing Corporation, right? They both are comparable. The difference is going to be in the total fees to do the program and the rates on a daily basis, which are not negotiable. The programs dictate the rates, and that's going to be on most programs. unless you're doing a silent second that has some type of forgiveness period, okay, then you might have a difference in interest rates there, but it's not going to be a lot less, okay? So you want to make sure you understand those things. And then the other big difference is TSHAC currently right now actually has a grant down payment assistance. And if you go back and watch the video that I did Friday about down payment assistance, you'll understand why that's important, right? And then last and most definitely not least, we want to talk to you about the nationwide down payment assistance programs. And I'm going to come at this one a little different. We have them, right? Got an FHA program that will take care of the 3.5%. The way it's done is the 3.5% is sitting in the back as a silent second. Depending on what program you use, you're going to have to pay it back over a 30-year period, and the rates vary. But there's no first-time home buyer requirement, right? And so that's one flavor. The flavor that I like is this. I want you guys to get comfortable with the area median income lookup tool. Fannie Mae has one, the one that you see on the screen. Freddie Mac has one, right? And what you want to do is you want to go and find out what area of the country you want to live in. I just typed in Houston, Texas here as an example, and I just picked an area. But really, if you have an address, it'll tell you what the area median income is for that zip code or for that MSA, okay? And as you can see here, if you're at 80% or 50%, you need to run, scream, and holler, okay, if you really want to buy a home, especially if you're a first-time home buyer, someone who has not had ownership in a primary residence in the most recent 3 years. Why? They got all kinds of money out here, okay? All kinds of money out here. And then on top of that, if you're an EMS firefighter or a police officer, and I do your loan nationwide, paying for the appraisal until further notice. Because costs are up, man. Costs are up, and we're trying to help you get into a home. Why? Not only because it's my business. Those that know me know, right? I've been doing this for 20 years. And just ask around or Google and let some of those reviews speak for me. Uh, I've told people countless times if I didn't have a good deal, where to go, right? But more times than not, that's not the case because I don't have any overhead, all right? So nobody's better than anybody. What you have to do is look at the numbers, and then you have to understand the numbers. So if you are in a application right now and you want a second opinion, reach out. Doesn't hurt to look, right? Y'all kill me, especially folks that don't have. Y'all kill me. Y'all want to be super secret, and then you want to cry after you get got because you went to one person. Shopping benefits you, okay? And so I would encourage you to shop, and I'm going to do a video on loan estimates so you guys can understand what it is you need to look for. Because all the fees aren't cost. Some of them are to establish your escrow account. Some of them are for prepaids. Taxes are taxes, right? And nobody ever talks about the title company. That's what you guys need to learn, man. The one that don't never say nothing, shh, that's who getting all the money. Title company fees, crazy. Nobody talks about those. Realtors, you guys are now starting to feel they in your business now, right? Some of you buyers agent, y'all better step up. Holler at me, and I have some solutions for that. It's not a problem, but just some solutions to help you get over that hurdle of negotiating your worth. Okay, so there you have it, man. There you have it. As we go back, we talked about the nationwide down payment assistance, right? We talked about the Texas down payment assistance, and as you can see below, I got Mississippi, Louisiana, Oklahoma, right? The best DPAs in those states, okay? Then nationwide, okay? And find out what that AMI is and shop so you get the best deal. We talked about rates, from a 10,000 foot view. Again, you got to apply to see what it is that you could get. When you're ready to actually contract and get a contract, it's going to be completely different. But this gives you a ballpark, and as you can see, it's going the right way. Don't delay. Get in motion, right? And so then we talk, well, yeah. I'm going the wrong way. Yeah, we talked about the rates. Then we talked about this PowerPoint here. Okay, affordable housing. That's where we were at, right? Bomb. Affordable housing. and we back to me. So my time is up. I thank you for yours. As I always say, guys, be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed. Do 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 do.